Hello everyone, newborn investor here and welcome to another video. Today I'd like to talk about the reasons why I bought Affirm holdings. So if you're interested, make sure to stick around as we're starting right now. Following a successful IPO, shares of Affirm have dropped over 40% from its all-time high of $140. Part of this drop can be attributed to renewed investor sentiments around growth stocks. Growth stocks that thrived during the pandemic are taking a hit as inflation fear grows, and I think the stocks are due for a rebound. For Affirm, things went from good to bad quickly with stock price dropping almost 40%. So will the drop continue further or will the stock bounce back? We will get to it in a minute, but before that, if you like the video and find it valuable, please make sure to hit the like and subscribe button. Your humble gesture keeps me awake at night and motivates me to put in the long hours for making these videos. Alright, let's move on. Affirm is now one of the top 3 players globally in the buy now, pay later segment. With its flexible payment options, Affirm serves as a great alternative to conventional credit cards. I initiated a swing position on Affirm last week as I think Affirm has great upside potential for the reasons we're about to discuss. I've already done a video on Affirm and its business model, so if you have not watched it, I highly recommend you watching that video first before continuing on this one. Alright, let's move on. Affirm reported strong third quarter results for fiscal year 2021 which exceeded most of analyst expectations. Let's talk about some of the key metrics from the earnings report. Active merchants on Affirm's platform grew to 12,000, nearly doubling from the same period last year, and total active customers grew by 60%, with total customers reaching 5.4 million. Gross merchandise volume was also on the rise at $2.3 billion, representing a year-over-year growth of 83%. Revenue grew by 67% year-over-year to around $230 million, while revenue from its merchant network grew by 46% to $97.9 million. Operating loss was $169.5 million compared to $81.5 million for the same period last year. This loss can be mostly attributed to the hefty stock-based compensation of approximately $140 million. The company forecast a year-over-year growth of greater than 80% for gross merchandise volume and 40.5% for revenue at the low end of the range, and I personally think Affirm's forward-looking guidance is pretty conservative and it has way more potential considering the increased adoption of buy now, pay later solutions. Many analysts have downgraded Affirm after the company came up with a recent earnings report. Credit Suisse has cut its price target from $85 to $70 while maintaining a neutral rating. Bank of America Securities came up with their ratings recently and they upgraded the stock to a buy rating with a price target of $71. Bank of America analyst Jason Kupferberg claims that the consensus estimates for gross market volume and revenues are too low for 2021 and 2022. He believes that Affirm's strong relationship with Shopify and other merchants should drive up revenues and gross merchandise volume. As of releasing this video, Affirm is trading over $62, which is below the analyst estimates. That doesn't mean Affirm is cheap. It is still trading around 12 times 2022 revenue estimates, so one may have to wait for a fair valuation or jump in paying a premium. To me, the biggest risk for Affirm is competition. Its major competition is the Australian-based Afterpay, a pure buy now pay later player which is already a public company. They have over 13 million customers globally and are growing. Klarna is another competitor planning to go public in late 2021. Affirm's competition does not end with buy now pay later players. Fintech giant PayPal already has built up a similar offering that accounted for $1 billion in gross merchandise volume. So competition is intense, but I think there is room for more than one player, with Affirm being one of the leading players. Another risk to watch out is the upcoming lockup expiration. But if you're in for the long run, it should not matter. So what's my take on Affirm? With growing merchant partnerships, I see Affirm as the market leader in the US for buy now, pay later solutions. Affirm recently announced a partnership with Shopify, and through this partnership, Affirm will power Shopify's Shop Pay installments in the US. Affirm's partnership with Shopify positions the company to capture the full potential of Shopify's growing merchant base. With every new merchant, Affirm also onboards their customers, which clearly makes me think that growing partnerships aggressively is critical for long-term success. Overall, I'm bullish on Affirm at least for the short term. As of releasing this video, I'm long 100 shares on Affirm with an average price of $60.54, and I'll be looking to add more as long as the stock price stays above $50. This in no way is a buy recommendation, so please do your due diligence before investing. Now, I would love to hear from you guys. What do you think about Affirm and its prospects? Leave a comment below with your answer and I'll be sure to follow up with you. Also, if you liked this video and found it valuable, please make sure to hit the like and subscribe button. I really appreciate your support. So until you hear from me again, stay safe and thanks for watching. Bye.